Great.
Good day, traders. My name is George, the craftsman trader, and I present to you live trading profits every Wednesday, as well as Wednesdays at the Market with George, the second Wednesday of every month. Now, for this beginning of the month presentation, I thought I'll just look at one particular chart, S&P 500, and you could use the information I'm sharing to look at the other charts. The primary message I want to get across is that measured moves indicate for us what is likely to happen in the market. The higher probability event to happen should price action break through a level of support or resistance. Now, you know, there's almost close to 90 live trading profits recordings in our archives at ATW. So suggests that you have a look at them, because virtually in every single one I have pointed out measured moves. Now, here's the power of measured moves. Let's just start here. This is December 2021. At that point, we spoke of a measured move within here. Whenever you see a trading range of sorts, you always need to put a measured move. So before the market got down here, you would have said, I've got a low, I've got a high. If we break beneath here, market is likely to go for a measured move. And we got to the measured move. So if you are selling, that's where you ought to be taking profits. Now, remember, markets are fractals. So whatever patterns you see on this daily time frame, they repeat themselves daily on the 5-minute, on the hourly, etc. So same principles. Then the market came through here, and even if you were in here and this market was turning here, this pullback, it said, hang on a second, I've got a high, I've got a low. If the bears break beneath here, where are they likely to go? They're likely to go for a measured move. And when you see that huge candle on the day and there is buying back and then creating a reversal candle, don't be surprised. So if you trade in 5-minute like I do, and I have a measured move coming inside, if I get up and I start to trade and the market is selling off, I'm going to sell off gladly. But when my measured move starts to come into view and the market turns, I get out and I look for reversal patterns. I just buy on the day. You know, all happens in the same kind of day. So when you had this and you had this double bottom here, you say to yourself, hang on a second. If measured moves are powerful, if the bears do break beneath this level or this level, where do they want to go? What is a high probability event? Well, this bigger trading range, that's where they want to go. And we've just gotten there, almost got there in June, but with this double bottom we did. And have a look here. If the market broke down beneath here, at some point, leave your measured moves in on the daily, don't take them off. And eventually broke out beneath that low, and we got to the measured move. You know, what precision. Then we had this pullback here. And I remember talking about this and still saying, you know, we are in a bear market, and that bullish price action was really just a pullback to create a lower high double top. So at that point, when the market started selling off, you kind of ask yourself, well, you know, we have this low, we have this high. If the bears break out beneath here, how far they're likely to go? Measured move, and we got there. Could have done that with the trading range in here, high, low. You'd have found that we'll get to there. Even this little trading range here, when you see those kind of things, let's just plunk it in quickly. There is a low, there is the high, and we got there. All this is profit taken within the measured move. So you can sell off, and when the market starts to turn, jump in and buy, especially as 5-minute traders. We just buy in a bear trend, but we buy in a pullback. Then, you know, you could do the same here with this little trading range, but distinct low, distinct high. And you kind of say to yourself, when the market is selling off here and you're selling, if we break out beneath here, how far do the bears want to go? Now, this is quite interesting. There is a measured move, and this suggests for us that the bears are not entirely satisfied. If you're a bear trading the daily chart and you took a trade here, you're going to put your stop up here and then just wait for to get your measured move. So even if you did that, or if you took profits at any particular point, then you just, you know, initiate, you know, your shorts again. Let's look at this. Time is not on my side. Look at this trading range here. Low of June, double bottom with September. So you got to ask yourself, if the bears manage to break out beneath this present low, where do they want to go? You got to put in the measured moves. And the measured move tells you that's where the bears want to go. I mean, that's in the 2870 range for 500. The bad news, if you are a bull, is that the higher probability event that's going to take place is that there is more selling still to come. All the bears need to do is break out beneath this double bottom, create a pullback, and then that's where they want to go. And bears who have sold here, and they are holding on to the shorts with the stop up here. If we break beneath here, they put the stop down. They want to get to that measured move. Another measured move here, and this took place just in this past month. September has been a great month for me, in any case, as a price action trader, just using this as one of the things in my basket. Low, high, measured move, bang. That's exactly the measured move. So you will not have been surprised with that. Now, what is this level here? This is a key magnet that's going to pull the market down. That's going to be heavily defended by the bulls. Bulls, I want to turn the market here. Why would they want to do that? This level here, as I've indicated, is the low of September 2020, but there's a double bottom that the market created right there. And this is going to be interesting. So that's the level I'm talking about. That's the measured move where I'm saying if you break out beneath this trading range, that's where the market wants to go. Now, why is this double bottom here important? Because, when we were here in February 2020, that at that time was the all-time high for this market in the 3334 area. That was the all-time high for the S&P 500, at least on the price feed that I'm getting from my broker. Then we had this low from March 2020, that's the COVID low. And if you were trading this market and buying, and you were a bull, you'd say, hang on a second, I'm going to buy here, I'm going to hold my stop down here, and I'm going to hope that if we break above this previous all-time high, we're going to go for a measured move, which is this red line here. And the market got to the measured move. What is it? 18 months later, or probably, within that range. The market got to that measured move. When the market broke out above that all-time high, humongous, for lack of a better word, fight at this level. The bears didn't want the market to get above the all-time high, so they kept on pushing back the bulls. The bulls wanted, of course, to get above it. So we went sideways, created a double bottom, created a double top, a trading range, breakout mode. Eventually, the bulls broke out above this, and they went through, even though there were pullbacks along the way, they go through to their measured move in this area. Now, have a look at this measured move. This is the all-time high now on this particular chart. And this level here, okay, it's the low of 2022, which is also, so the low of 2022 here in September, it is also the double top area in this area where the trading range. Okay, so that's, I've kind of indicated that for us. Low of 2022 is also now, because the price is coming down, the support of this double top. And so you can expect that there is going to be quite significant price action here. Bears want to break out, bulls want to stop that. So it wouldn't surprise us if we have a double top, double bottom. This area that might last for us, a couple of months, might even take us to the end of the year, who knows? But the objective is trading range price action, maybe, but the bears want to get initially, they'll get to this level. If they break out beneath September, they'll get to this level quite easily. Then they want to break out beneath here and get to the measured move of this trading range. But the ultimate goal is this, okay? At this level that we're at, we have an all-time high, and we have the low of 2022, and also the breakout point, from the all-time high that we spoke about here. The bears can see that. They're saying if we can break beneath this, our measured move is to go all the way down to the 2376 area. Then we just test that COVID breakdown. So just to wrap it up, measured moves are highly predictive of where the market is going to go. Use them on any time frame. But what this is telling us, that there's a higher probability that the bad news is not over. There is more selling, there's more crashes, whatever you may call it, to get down to that measured move. That low of March 2020, the COVID low is going to be tested at some time. How long it took, we don't know. It took us, almost 2.5 years to get this high. It may take us as long to get down here, but that's where the market is likely to go. Thank you, guys. Name is George, your craftsman trader. We will catch up with you in one of my